Hey Ben, it's great to be here with you today, and I'm really excited to dive into the topic of people data with you. And for those of you tuning in, my name is Jordan Esben. I'm the CEO of Credit Pulse. We help companies make smarter, faster, data-driven decisions. Ben, would you like to introduce yourself?
Yeah, thank you for having me, Jordan. I'm Ben. I'm the CEO of People Data Labs. We build workforce data. So we have a data set of resume information, company information, and job posting information that we clean, match, standardize, and deliver to data driven product teams like Credit Pulse to build really awesome products on top of.
Excellent. Yeah. PDL was actually one of the first partners that we leaned in on when we were building Credit Pulse, and we're really excited to talk because we want to talk about really why there's so much power in workforce data, and also like why does this not get as much airtime as it probably should. And what we found is the simple truth is that people drive everything in business. You can look at data all day long, but it's really the people behind it that are the cause of business happening. And what we learned is that if you want to really understand how a company is operating or how it's doing financially or where it's maybe headed with a strategy, one of the best places to look is looking at people first. So with that, let's dive in. And I guess, Ben, I had a few questions for you, and I think this all starts with talking about the data assets that you guys have built and insights on top of it. I guess first, like, how is PDL data being used across your customer base today?
Yeah, it's amazing how many different use cases there are for our data. So I always like to just tell the story of how we discovered some of those use cases. So we actually started off as a recruiting platform. So we had built a sourcing tool, and we ourselves could not find a high quality data source to provide to recruiters to help them source high quality tech talent. So we went out, we built that data source, we built a SaaS platform on top of it, we scaled that business to 6 figures of ARR. And then one of our competitors reached out to us and said, "Hey, you guys seem to have really good data. Where are you getting that from? Could we buy it from you?" And they offered us, a contract amount that was higher than our entire ARR as a business at the time. And so our immediate thought was, "Oh crap! Like we're in the wrong business. Like we should be a data company. Like we spend so much time and effort. We're so interested in building this data. Maybe we can help power a lot of these businesses that are starting to build on top of data." So we started off in recruiting tech. We power a lot of the platforms in recruiting tech. Very adjacent to recruiting is sales and marketing. If recruiters are looking to find and contact people to hire them, sales and marketing is, salespeople looking to find and contact people to sell to them. And so the data set was very interoperable between those two use cases. Over time, we started to see pockets of customers in other places: investment research, fraud and risk, commercial real estate. And we started to also tune our data set and some of the work that we were doing on our product roadmap to meet those needs. But really at the core of what we do, we've just focused on building high quality workforce data, linking it to contact information to make it actionable, making sure that it's interoperable with other data sets that you might need to understand the workforce, like company data, like job posting data. And that's been our core vision. If we can get that data into as many product teams' hands as possible, if we can cover as many different sort of rows and columns that those teams need to be successful, we view ourselves as being a successful vendor and a successful business partner for those organizations. We've sort of like expanded very broadly across a lot of different use cases over time.
That's amazing. I mean, what is Signal for you guys? You built it just as to solve a problem you guys had, and then someone's like, "Well, that's valuable. We'll add a zero to what you guys make today." It sounds like, or some number, and that's an amazing story.
Something you build for yourself is never as high quality as something that you're building for one paying customer. Something that you build for one paying customer is never as high quality as when you have 10 customers giving you feedback. Early on, I used to joke that our customers were our QA pipeline because we had not built QA into our systems yet. And so, the way we would know the API was down was a phone call to one of our engineers' cell phones at 2 a.m. that the API was down because we didn't have monitoring yet. And, that's just the world of startups. And over time, you sort of, you mature, you obviously build those processes out. But yeah, it's definitely an iterative build process for sure.
I did want to pivot and ask you specifically about, I think you said fraud and risk use cases as that larger set of use cases. Like, how does that fit into the ecosystem? what are some of the common use cases that you guys see people use PDL data and your insights for?
When you think about like traditional sources of sort of credit data, there's a distinct set of sources on the person data side that are very linked to a consumer's identity and a consumer's creditworthiness. So the primary keys of that data set might be a social security number or a name and an address. There's very, very large providers in the market that have aggregated credit risk and consumer worthiness data from a lot of different places. And then on the corporate side, there's like your D&B sort of legal entity type providers that have aggregated legal filing data, combined it with company creditworthiness. But where we sort of fit into the puzzle is actually bridging the divide between those two data sets. Again, shout out to early adopters. An early adopter of ours in fraud and risk once told me that companies don't commit fraud, people do. And sort of was telling the story to me about how when the PPP loans came out, individuals would start spawning companies or finding, companies that had gone under years ago and sort of reincarnating them and using those, corporate entities to commit fraud. And a lot of the PPP loan fraud was obviously committed by individuals or rings of people who were determining how to exploit, the government programs as easily as possible. And that was actually sort of our entry point into fraud and risk, was identifying, are individuals correctly tied to the right company? Are individuals tied to many companies? What has happened at a company over time? Has like the employee count spiked and then dropped dramatically? And some of those novel signals that can come from workforce data that don't come from those two traditional sources of data was really our entry point into the market.
That makes sense. I guess a follow-up question, like when you look at how companies try to judge the health of another business, have you guys found that like some workforce signals are more valuable than others?
Yeah, headcount number one. Dramatic changes or shifts in headcount is like a big signal of potential fraud. Employee locations is another one that a lot of our customers are very focused on. Businesses that have employees in countries that are embargoed is like a very big risk factor as you're thinking about like supplier risk. So that's an area where we've seen some customers focus. And then actually drilling into the individual employees and their affiliations is probably a third category. So there's a great article that one of our customers put out 2 or 3 years ago about individuals who were associated with Chinese universities or the Chinese government coming to the US, studying at American universities and or working on projects that required security clearance, and then sort of going back to China and identifying that there was this huge inflow and outflow of people that were likely stealing intellectual property, likely stealing confidential government secrets. And so that came from just looking at the individual records in the PDL data in combination with other data sources, of course. And that was like a very, very interesting signal, because I don't think we had thought about that before. That you could actually look at the individuals themselves and their history. People are actually very transparent about what they've done in the past. And, you don't want to make any assumptions about like someone's past experience or education being directly correlated with a potential like criminal history. But, those are risk signals that are very important for companies to be looking out for.
That's fascinating. So people like committing IP fraud, they're like, let's update my LinkedIn and show that I moved. It's interesting.
Or like the opposite, right? Which is, hey, like PDL has been collecting this workforce data for a very long time.
Yeah.
Like we saw at one point that they had a Chinese university on their LinkedIn. They removed it. It's not there anymore.
Interesting.
And now they're positioning that, they don't have any education history on their LinkedIn, for example. And that's, that's an interesting signal in itself, right? Like, why did they remove that information? And a more recent version of that that's more HR tech specific is there's been this big rise in fake candidates submitting applications in bulk, basically like using AI and agents to like go out and just submit to every single company job board and tuning the profiles to match what the company's expectations are. And so now we have some customers that are trying to solve that problem. We're looking at the change in the profile over time and seeing that there's been lots of different work histories affiliated with the same public person or public entity. Is a huge red flag, right? Like if you had an entire history of working as an accountant and now all of a sudden your entire history is working in, engineering, like you didn't make a career pivot, you have 10 years of work history in both that are overlapping. That's super strange, doing both of those jobs at once.
Interesting. That's fascinating. I hadn't thought of looking at someone's profile changing over time and what's missing as a really good signal for, this is weird. Usually people's LinkedIn's just get more full of stuff and not
Yeah.
disappearing from their profile.
Yeah. I'm curious, since I know you work more directly with the credit teams, like how are credit teams thinking about alternative data? Why do you think there's such a demand for alternative data right now amongst credit teams?
Yeah, it's interesting. I don't think the need for alternative data has changed much. I think it's how we get it into people's hands, and then how they leverage it. And there's always been there's this framework called the 5 C's of credit, and you guys might be familiar because you guys work with a lot of other credit folks in credit. But the most important one here, and it's the hardest to assess, is character, and that's all about the person or the people running a business behind the scenes. So what our customers have always done in the past is like they might buy a credit report from a credit bureau, and then they spend minutes, hours, days Googling the principles for that business. And when you have thousands or tens of thousands or hundreds of thousands of customers onboarding, no one's got time for that. So people end up either skipping it, or doing it just kind of when they have time. And what we learned is if we can get that right in front of people when they need it, they're much more willing to look at it, analyze it, and try to make sense of it. So we look at a lot of the same signals that you were talking about, Ben, already. Has someone, does an individual person have 10 different companies that they've been tied to over 3 years? Like, that's suspect.
Mm-hmm.
Why, unless you're a board member, but no, unless you're a CEO of all these companies at one point, like, what is going on there? Like, are you raising venture and then stripping money out of it? Or are you getting sued by your customers and then declaring bankruptcy? This happens all the time with the customers that we work with. And it's one signal that people look for.
Nice. And, some of that I imagine you can get from like traditional credit reports or just different business filing information. Like, why is workforce data specifically important, or how does that play a role in some of the signals that you're describing?
Yeah, there's two pieces. One is tying the person back to the entity. PDL and like the data that you guys have like is another really strong data point for us to do that. Most people, I think, overestimate or maybe underestimate the ability for people to commit fraud through like Secretary of State filings. None of that stuff is like really locked down. Like, I could go in today and like probably try to add myself as a principal to someone else's business, and that happens all the time. And no one's really solved that problem in a really good way of making sure that the person and the business entity, you can really trust that connection. So I look at this data as one being a really good signal for that, and the second one we look at is like the profile of a business. So we use that data from you guys to figure out like, all right, did they have a plumbing business before and now they have a roofing business, or did like their website just change a little bit and it went from being a roofing business to a solar installer? Interesting. Like, what's going on there? And the end point of it, whether it's these entity signals or headcount changes or a business evolving, is we want our customers to go ask questions and figure out what's going on behind the scenes, because you're essentially assessing the health of this business, but sometimes they got to go ask more questions.
Yeah, 100%. And you brought up two things that I always think are really interesting to just think about. The first is like, how do you identify if somebody actually has authority within a business, right? And I think you're right. People are very dependent on the Secretary of State filings for that. But inversely, there are many people who have authority to make decisions within a business who might not be in the Secretary of State filings at all. And that's like a completely separate challenge and question. And like, if you don't accept them, you're limiting the amount of business that you can do and the amount of transactions that you can approve. And then the second thing that you brought up that we've talked about and thought about a lot is like industry categorization for companies and what companies are doing. And people are very dependent there on an industry standard as well, which is like the NAICS codes. But NAICS codes are very, very easy to game. Google actually has some NAICS filings that call themselves a hair salon. And it's
Hmm.
because somebody affiliated with Google opened a hair salon on Google campus, and somehow that NAICS code got tied to Google. And
Yeah.
obviously, that's not malicious. Like Google's not trying to pretend to be a hair salon, I hope. But for smaller businesses, it's very easy to like sort of game the NAICS system. And when you go and you look at legislation, you look at rules, you look at like creditworthiness, right? Like the NAICS codes have a lot of weight, and no one is really validating that the NAICS codes that companies are filing with are right. And I think it's interesting that we sort of have these sources of truth that we all sort of blindly agree are sources of truth, and maybe they're not as truthy as we think. And then there's all this alternative data that might be able to help you inform,
Yeah.
right? Like the actual creditworthiness of the business, or if there's conflict or difference, right, that helps you find risk.
That's right. Yeah, actually, it was about a year ago. I was listening to a podcast about credit, and it was for business owners to figure out how to get more trade credit, essentially, from their vendors or from their banks. And one of the pieces of advice the podcast host said is like, really check your NAICS code. Really make sure your SIC code is one that's going to be accepted by your creditor. And that stuck with me because I'm like, that's interesting. Like, you should just say what your business does.
Yeah, I had a similar shocking experience actually related to our own business. So there's been a huge slew of data privacy regulations that have slowly come into being. And, these regulations sort of treat different businesses differently very frequently.
Yeah.
And the way that they segment and determine which businesses go into which categories is using the NAICS codes. And so sometimes there's exemptions in this legislation that are very tied to the NAICS codes. And so in my head, I would never do this to my business, of course, just to caveat it. But hey, if I just made my NAICS code, 1, 2, 3, 4, 5, all of a sudden I'm exempt from this law,
Yeah.
even though like my business operations might be directly tied into it. I'm sure that's true across, many different types of legislation because it's just such a naturally simple way to categorize things.
Mm-hmm.
But yeah, I've heard similar things from a lot of our customers that they just experience a lot of this like NAICS code fraud,
Mm-hmm.
or their customers are asking them to help categorize businesses better because like the categories don't necessarily line up with their expectations.
Yeah, absolutely. Absolutely. Yeah, it's pervasive.
Yeah, one of the challenges that we have that I'm curious how you think about, since you're maybe dealing a little bit further downstream, is we're providing this raw data, right? And this raw data is really powerful
Mm-hmm.
for generating these signals. But it's very difficult for like the average CFO, for example, or a leader to actually integrate raw data into their pipeline. Like how do you sort of bridge the gap, or how would you think about if you were a leader of one of these large businesses that's trying to do more creditworthiness checks? Like what are the ways that they could sort of tap into some of this alternative data?
Yeah, sure. I'll speak to this from obviously just my perspective in trade credit and knowing it's going to be different for every other industry, I'm sure. But there's two structures that we use to think about this. The first one is it all starts with the problem, and the data and signals and APIs that you guys have are a solution. But the first thing we did is lots of discovery. Like, hey, what are the common issues that these companies run into from a fraud perspective, from a credit perspective, from a late payer perspective, and then we asked why. Like a 5-year-old kid, we asked why like 20 times. Like, why is that happening? Why didn't you catch it? Do you think there was some data that you could have seen that you could have used to catch that person that classified their business incorrectly or that wasn't related to the business that you thought they were? So we did, months of discovery around that before we even started looking for, does someone even have this data out there? I'm very glad we found you guys, but it's all started with the problem on that piece. And then the second piece, which I think is really important, is we kind of think about ourselves as like laying stepping stones for these folks. So the step one for us was bring the data in and see if we can make sense of it internally first. Can we spot these signals of someone misclassifying their business, or when there was a layoff in their workforce, so a lot of people, leaving the company quickly. So we thought about that a lot. We looked for those signals, And then we really thought about what do those mean if a company's headcount is going down really quickly. Some people would argue maybe that's a good thing because they're becoming more cost conscious and they're going to be more focused on margin. And others would argue like, oh, maybe they're having liquidity issues, so they need to just cut cost, and their sales are going to suffer because they laid off their sales team. And the more of those questions that came up, and like we were being challenged by our customers, the deeper we dug into the data that you guys have. So we're like, oh, interesting. We can see how many people from the sales team are leaving, or we can see is it a back office support role or an accounting role. So step one, like we looked at the data. Step two is like, can we get signal from it? We're just at that point. We're seeing enough commonality with what people do when they see these things that we're building more predictive kind of capabilities within our platform. I'm going to keep AI mostly away from our conversation here, but people want things like automated recommendations, next best action based off that signal. So problem first, and then the stepping stone model.
Definitely. And do you see like any traps and potentially like needing those next steps or relying on like an individual signal or a score as sort of the final outcome? Because like often the signals are probably not the whole story. Like how do you think about over reliance on individual signals potentially?
Yeah, we just don't. I guess is the simple answer, but we have a bunch of different data vendors that we work with, and they all have their specific kind of lanes. PDL we use heavily for that company profile, really augmenting what we get from a credit bureau. We use the people data that's very unique. We found it to be very accurate, but we get other data. We license data from the U.S. banking system. We get data from credit bureaus, and then we get data from Google. And so it's no one signal. It needs to tell an overall story, and we combine that for each company, and we build these comprehensive profiles. So that's worked really well for us. Where we're headed with it is like, how do people get the insights they need as quickly as possible, and then do the action, and then move on with their lives, essentially.
Yeah, and I think one of the things that we've seen, so we work with, companies like you who are building products and then serving end users. And we also work with, enterprise organizations that are sort of trying to do a lot of this fraud and risk modeling in-house on their own. And I think the trade-off that we see between whether a company would come and work with us directly or work with you is really, how much nuance they want to apply to their own specific business, right? Like, I think what's awesome about your approach is you're giving people like sort of the multitude of different data points that they can assess. But frequently, I think people are used to and conditioned to want just like that one signal. Like, what is that next action that I need to take? What do I need to do?
Yep.
And that can almost become like a crutch, right? Like people get trapped in like trusting the answer that you give. And as businesses get larger and more nuanced and there's more layers, like, that's when I think starting to dive a little bit deeper into the data can become really valuable. And like when we work with these sort of large organizations, fintechs, financial organizations who are working with us directly, they're investing so much in data engineering and data science to use raw data like ours instead of to consume a signal. And I think the reason they're doing that is like they just want to dive that layer deeper. But it's also like a huge investment to do, right?
Yeah.
I think you're always trading off like the precision that you can get from going deeper with like just speed and turnaround time and cost, right? And making sure that you're like operating your core business. Like no one wants fraud to happen. People want to prevent as much of it as possible. Like losses can pile up really quickly, but also that's not the core focus of what a lot of these institutions are doing, right?
It's been an interesting learning experience for me where initially we basically exposed all the raw data and we're like, hey, here's your signals. And what we learned is, I think one of our customers was like, I'm paying you to give me an answer. And we're like, well, do you still want the data so you can like drill down into it? And they're like, yeah, both. Why not?
Yeah, 100%.
So, maybe I was like 20 years behind on realizing that. But, we ended up building a predictive model that combines all these different disparate sources and, similar to how a bank would do a business underwriting type model. Ours is just applied in trade credit, but it's still underwriting. And it helps people make sense of like how much weight should they put into their a company's headcount going down really quickly, and we were able to pretty well like pick out those signals by back testing a lot of historical data and seeing how does this all add up, like what
Mhm.
how do we really increase the answer that we give to people.
Yeah,
um,
that's a great approach. Yeah, we came at the problem and the realization from the exact opposite angle, which is that we just like, similar to you, probably just handed people the raw data. They're like,
yeah
well, what is the signal? They're like, well, we don't know. Like, we work with HR tech customers, we work with sales and marketing. Like, that's our core focus and core business. Like, just use the raw data. Like, figure it out. Come on. And
yeah
some people just really struggle with that. And right, like it's a huge time investment to go and figure that out. So it's awesome, what you're doing at Credit Pulse, because I think you're solving problems with a very very unique combination of data in a way that there's not many companies are doing today.
yeah it's been a lot of fun to build. And Ben, I do want to ask you, like, when you look at the future of workforce data and what you guys do today versus like where you see it going, would love to understand like how you see that evolving.
Yeah, I'll give you two fun things that we're thinking about right now, and both of them actually sort of tie back to the same core theme, which is expanding coverage. Um, in the person data set that we have today, there's many different sources of resume data that you can go out in the world and get. But the reality is that a lot of them are very tied to the white collar English speaking West. And the further you get from those three adjectives, like the harder it is to find data on people. And I think as more and more people come online, the workforce comes more online, those gaps will close. But also, like, we at PDL need to figure out how we close them faster by improving our data sourcing and finding more places where we can aggregate individual level data from. That's an area where I think we are really focused on differentiating ourselves, and I think it gives a customer a lot more power when working with the data when you have a more complete picture of the workforce. Um, and then similarly, I think on the company data side, no one has ever really figured out like what the correct primary key is for companies. Um, like companies are a fictitious entity. I always say like people are skin and bones first, and then the data comes from them, right? But like that doesn't exist for companies. There's no tangible thing that makes up a company. And so really working with our customers to define like what the valuable universe of companies is and what that means is a big focus for us. And how do we like expand and make each of those companies useful? Because you could go out today and crawl every single website out there and call that a company. You could go out and pull all of the legal filings for every single company, every single Secretary of State filing. But then you've just created like a ton of noise.
Yep.
And the signal that our customers care about is like the true entities that have people behind them. And you sort of lose that by going really broad. But when you go really specific, then you start to miss these pockets of companies and these corner cases. And that's, from my perspective, where a lot of the fraud hides. Like if I'm starting a company to commit fraud, like I'm probably not going and making like a marketing site that's really complicated and creating a LinkedIn page and going and raising venture funding and going on Crunchbase, right, and doing all of these
Yeah,
different
no way.
things. Like it's way too much effort. Like I'm doing one or two things that are going to allow me to extract capital as quickly as possible. And we want to have those companies in our data to better serve clients like you. But how do we identify them without like creating a lot of noise is the question that our team is really thinking about right now.
Yeah, I mean, huge implications if you guys get that right, because we see that problem in trade credit. I know it's a thing in commercial underwriting, all these other industries, probably even IT security. But like, just to follow on with what you said, like we see mostly simple fraud where someone's applying for trade credit as Nike and it's got an extra e at the end of the word in their email address. Like that's kind of the length. There are certainly more complex fraudsters out there, but a lot of it starts with kind of simple games that people play and try to hide under existing entities. So I'm excited to see how you guys figure that out, and because that's hugely valuable.
Yeah, and we have the challenge that our customer base is so broad that if I talk to you about what you want as a company
Yeah,
in the data set, it's very different than like what a investor might want or what a sales and marketing company might want. And reconciling those will hopefully lead us to ground truth or it might lead us to madness. We'll find out. Stay tuned.
So we work with a lot of building material manufacturers and distributors and service companies, and there's so much like PE purchasing in that space, and then combining of companies, tracking like how companies are split apart or combined. Kind of a addition to your problem, but I hope you can solve that too at some point.
Yeah.
It's so hard for these companies to keep track of, and that's where our customers, have challenges. Like how do you track private transactions essentially?
Yeah, and just to give maybe like a little bit of a tidbit and take us into the world of parent and subsidiary data,
But
one of the really cool things that's available out there is just tons of free text information about a lot of these transactions. Like when they are real actors that are consolidating or splitting apart, there's often press releases, there's filings, etc. And I think consolidating, aggregating, standardizing, and getting the right information out of those, say, press releases has historically been a very, very difficult problem that, I know we're dodging AI as much as we can, but that's an area where LLMs have just really, really helped us level up some of our process. And we're doing a lot of really cool experimentation around, okay, like just go and grab a corpus of data about two companies that we think are related and see what information we can get out of, this free text that they, the search results return, that press releases return, etc.
yeah, absolutely. Absolutely. We should chat more about that. I think we're doing something around that with news data right now. But yeah, LLMs are changing the game. We're seeing it with data extraction and scraping and all that fun stuff.
Nice. And I know we wanted to end talking a little bit about sort of our joint roadmap and some of the things that we're working on together. So we've sort of naturally stumbled into that. I'm curious, how do you think about like what's to come on your roadmap and maybe how workforce data or people data labs data might fit into that?
Yeah, sure. We've almost covered all of it already, but I think there's two pieces that are really important. I think one core piece is entity resolution, like what we were just talking about. Like, how do we make sure a company is a company and is not fraud, and how are people tied to these companies, and when companies get split up, like how do we track that? Huge issue in trade credit. So I'm looking forward to seeing where you guys go with that, and maybe we can collaborate on some of the learnings that we've had in that space. The second piece, which I know you just said LLM, but I'm like, yeah, I'm going to jump on that. We're finding that that next stepping stone for our customers is really AI driven automation. So we're building multimodal agents that can do things like analyze an entire portfolio of accounts with all the data from PDL and our other vendors, making it really smart. It can produce signals, but then it can also take actions on behalf of the user, whether that goes back into an ERP or a CRM. So, yeah, Ben, would love to hear from you, how you see it as well.
Yeah, I mean, I think you hit on a couple of really interesting items. The only one that I would add that I really think is a challenging evolution and leap is like linking those company entities as we extend them back to the people as well.
Yep.
The more entities you add to the company data set, the more people you add to the person data set. Like it becomes harder and harder to reconcile those two data sets together and link, the right person to the right company in a way that continues to maintain the data quality that I think our customers really value. I mean, I think that's like the true unlock, right?
Yeah.
I think we started this conversation saying, the number one hardest thing to figure out about, business credit fraud is the individuals at the company and the impact and influence that they have on the actions of the business. And figuring out that problem, I think, is like the big challenge that a lot of companies in our space are trying to solve.
Totally. Looking forward to seeing how you guys go about solving that, and that'll be hugely valuable, I think, for a lot of different industries.
100%.
Yeah, Ben, I know we're running up on time, but I wanted to say thank you so much for joining me and having this discussion today, and I'm looking forward to seeing where our partnership goes.
Yeah, likewise. Thank you for having me on.